Hi everyone, it's the 27th of March 2026. I'm here looking at the E-mini S&P June contract, and just following on from my previous video, I think it was the 18th of 19th of March, where we had this setup that was forming around here. That was essentially saying that the market's going to do what it's done now. So you could go back to that video and see what I was saying. I was looking at the SPX cash. We had that pattern kind of, so what we had last year around the same sort of time was this pattern here. So the moving average the 20-day moving average coming below the 200-day moving average. So that's the blue line coming across down below this pink line here, and then that signifying as soon as it went below the 400, which is this orange line, we had a strong indication that this was appearing to be an imminent crash. Okay, so it goes back a bit further than that. You have to see the signs around here. It's just not based on moving averages. We do look at implied volatility premiums relative to historic volatility. It's not that complex. You don't have to get into the complexities of option strategies, but you do have to understand. Here we are. Let's just take a quick look. You do have to understand what premiums institutions and fund managers, etc., are willing to pay to try and protect the downside of their portfolios. And that's this white line here. And you could see historically the gap between this white line and this orange line being realized volatility, or realized volatility, also called historic volatility. You can see that that gap is widening. In other words, institutions are willing to pay a higher premium for insuring their portfolios. That's all it means, right? I won't get into the complexities around option strategies. That's not what I'm here to talk about. But we have to look at things like this. We have to then look at program trades, spreads, and things like that. But I'm going to get straight back to this, okay? Because you can have a reasonable opinion just looking at moving averages and key levels in terms of 13-week highs, lows, gap opens, and so forth. So anyway, stick with me on this. The SPX cash last year proved this kind of pattern. This year, around the same sort of time, you could see that we had these extremities here. Just forming, and then I put a video out there saying that, look, that cross is imminent. I think back then, about 2 weeks ago, for whatever reason, because the maths also has to add up, so that cross was more prominent back then than it is now. So anyway, the cross is here. We have even come below that 400. So what does this suggest for sell in May and go away, right? What does this look like over the coming weeks? Well, we could definitely see some kind of retracement, right? We could expect some kind of pullback higher. So sorry, this is the SPX. I'm going to come on to the E-mini now, right? So just please be mindful of these levels. I didn't actually want to look at this, but we're going to go to the levels here. This is now we're on the, oh, are we? No, we're still on the SPX. Where's the E-mini? Here we go. Let's go back to this. So now this is what we need to be looking at, okay? Like I said, we have that weakness and potential for retracement, right? But this is a key level that we saw on the 23rd of March here, right? We had 6482. And what you can see now in real time is that the market makers, the big players, institutions, they're playing with this level. They're creating liquidity around this level. They're taking out stops because we are going to see some kind of strength. Watch now. Mr. Trump is going to come out and say something. There will be some kind of positive spin in the markets, because this kind of decline is really overstretched and overdone. We have a wide divergence between the price and these moving averages, and that's, that can happen. That's not the defining factor of what's going to happen out there. But what that is an indicator to give us a strong opinion. Remember, we need opinions. We're not here to predict the future. We just need to have opinions about where the market's going. And the more those opinions are focused and centralized, the more likely things hover around that area or that price. And that's what we can see here. We could see that, look, a lot of people have the same opinion as me, that price is hovering around here. Liquidity is being created here. Institutions, it's a Friday, so institutions are looking to maybe dress up around here. And so they really just want to They just want to start. We need to see more activity than we're seeing right now. It's like my screen's frozen or something. What are we? We're still moving 30. Oh, it has frozen. What on earth has happened? Oh no, it's okay. We're still. I don't know. I thought my screen had frozen. No, it's not. Sorry, I beg your pardon. So yeah, we're still where expected to be. So we're still at those key levels. It's just the chart had whatever. Trevor, ignore me. Let's get back here. Here we go. Right. So as I was saying, we are still. I'm not going to edit this video, by the way. We are still at this key level. So here, anyway, here's what I'm looking to expect. Here's my opinion that we're going to have some retracement. I am not going to be buying into strength here, by the way. You can see I have one order that's going to be a big sell. It's around these sort of levels. I'm not buying into this market because it's an inherently weak market. So where do I see the level? Where would I be buying at? Would I be buying on a Friday with weekend news? I'm not sure. I'd have to assess what's going on at that moment. But we're looking at the next couple of hours. I'm going to see, I'm just going to be a bit vague here. So we're going about here. Let's get some targets drawn in over here. Where are you? Here we go. So we kind of back up to this sort of level, right? I want to see, so this 20 moving average here, this blue line, I expect some kind of retracement. Look, in real time, it's happening. Can you see that? I expect some kind of retracement into this level to then be broken again. And then we're kind of around this sort of level here. And at best, if we're lucky, we're going to get this level to bounce down off. So I think this is going to eventually
Market
become.
data connection lost.
Oh, I've just lost my market data. Just had an announcement come through the market data. Either the
Market
Wi-Fi.
data
Oh,
connection
we're back on.
re-established.
We're back on. Okay, so I expect there to be some resistance at this line, so we're going to put some resistance lines here. I think that's where we are for resistance. I don't like these colors. Now let's keep that as resistance, right? So we can see that. I'm not going to put any other levels because these charts can turn out to be quite messy. But anyway, through the course of the day, this is where I'm looking to short from. Right now, you could watch this yourself. Even through this conversation, you could see that things are starting to move in the right direction. So I would expect, what is that level? What are we looking at? I'll go ahead 6540. I still feel, look, I still feel we're going to come and overshoot because everyone's expecting this now, right? So I think there could be an overshoot around here. For the rest of the evening, the price might hover around here to try and keep testing this level, right? It's going to keep testing this. So now what I would do at this stage, so what level is this? 6581. Let's get that noted around here. 6581.
Market data connection
Oh, my
lost.
connection's dropped again. And it might come back on. So these will just freeze. Oh no, we're good.
Market data connection re-established.
Sometimes these brokers just drop things, and unfortunately, we may lose some track. But this is the best case scenario here. 6581. Wait, let's keep going. I keep losing that. So 6581 here, and then worst case scenario, as in like I might not want to get in at this level here. What level's that? Let's get down here at, what are you, 6540? 6540. I don't like, I would still feel a bit nervous going down short at that level, right? Right now we're at 6470. So, we're still 70, no, even 80 points, 79 points, or 78, 70, 77 points away from the level that I would probably short at, but uncomfortably. At 6581, I'd feel very comfortable shorting at that. All right, so we're actually 110 points away from where I would feel comfortable going down, because keep in mind, I have a bearish view on this market, but we need some retracement. We need some strength. It's not, going to just keep going down without some pullback. So keep watching this. Keep watching these levels. hey, listen, I hope we get past this one. Otherwise, this is a complete review. If we don't breach this level, this 6485, if we can't come above that, then this market is worryingly weak. Okay, but I want two weeks or so. I want some kind of retracement before the final big mammoth crash down to sort of 6,320 or you know I think look even as low as 6,200s or thereabouts. That's what actually my ultimate target for April and May. We'll see some. I hope to see some repair work going on, and then it will kind of bounce around that for the rest of the year. I think we're kind of in the levels which we'll see for the rest of the year. I don't think we're going up to kind of 7,000s or anything like that. Um, so let's just get this on a day chart just so I could get some feel there. Right. So on a daily basis, you can see there's, look, apart from the retracement aspect, because we have got these three down days happening here. After 3 days, things do generally have a retracement, 3, 5, 7 days. You see things kind of going in the opposite direction. So this is kind of like a 3-day move, which I'm happy with as well. But look at the potential downside here into the 200 moving average. Um, the data is not very strong here, but this again just indicative. Let's get down to the more short-term horizon, see where we are in that plane of things. Right, beautiful. That's all we want. Right, look, here's what we want. We're good. I think I'm not going to call the time, by the way. It's any time. It's any time through the. It might even be kind of close of play, but I just want to communicate the key levels here. Right, so let's keep watching this throughout the course of the day. I might post another video around this. Sorry, 6581. Where are you? Why did I say 6581? Where was? Oh, it was here, wasn't it? Yeah. And I think it was linking up to that level. So key resistance. That's where we are, right? The two key levels. Sorry, I know I've said this a lot, quite a few times, but I just need to keep it clear in my own head. You have some time now to watch this, set your levels, set your orders. If you're happy, hey, listen, there's 3 levels of risk here. Either you could take a massive risk now and go long if we breach this level here, this kind of 6492. If we kind of come across that in the 6500s, I think rest assured you might get 10 or 20 points, or maybe about 30, 40 points going north of that. If we don't breach that level, then I have to reassess, because then I would have to assess the math behind the divergence. We'll do some Z-score analysis. That's where it does get a little bit complex, but I won't go into that right now. Okay, so thanks for watching. Subscribe, because I'm talking to myself here. All right, someone subscribe, because I think I've got 0 subscribers right now, and I'm doing this more for myself right now to voice my thoughts. But listen, I'm giving this 50 videos. That's my target. After 50 videos, that's it. You're getting some good stuff here.